Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we are diving into Hovnanian enterprises, and unlike some companies that build castles in the sky, this one is about actually building houses. Let's see if their financial foundation is as solid as their construction. The main thing in this filing is that on April 11, 2025, Hovnanian said that their board of directors decided to buy back more of the company's stock. This means they think the stock is undervalued and they are willing to invest in themselves. Let's break down what this means. Hovnanian has authorized to buy back almost $31 million worth of their Class A common stock. This is not a brand new thing they decided to do. The board started this program back in September of 2022 and increased it in December of 2022 and increased it in December of 2024. Now they are adding even more money to it. The timing and amount of these purchases will depend on a lot of different things. These include legal requirements, the price of the stock, how taxes might be affected, and the general state of the economy and the market. They can also stop or change the program at any time, and there is no set date for it to end. So what does this all mean? Basically, Hovnanian thinks its own stock is a good investment. They are willing to spend millions to buy it back, which can increase the value of the remaining shares. This can be a sign of confidence in the company's future. Now, for a broader look at the numbers and what they might mean, we don't have an income statement here, so we'll talk about what this buyback might mean. A stock buyback is when a company uses its cash to repurchase its own shares in the open market. Why would they do this? Well, there are a few reasons. First, it can boost earnings per share. By reducing the number of outstanding shares, the company's profits are spread over fewer shares, making each share more valuable. Think of it like cutting a pie into fewer slices. Each slice gets bigger. Second, it can signal confidence to the market. When a company buys back its own stock, it's essentially saying that it believes the stock is undervalued and that it expects future performance to be strong. It's like betting on yourself. Finally, it can return value to shareholders. Instead of issuing dividends, which are taxable, companies can buy back stock, which can lead to capital gains for shareholders when they eventually sell their shares. But there are also potential downsides to stock buybacks. One is that it can be a short-term fix that doesn't address underlying problems with the company's business. It can also be seen as a way for executives to manipulate earnings per share and boost their own compensation, which is often tied to stock performance. And of course, it uses up cash that could be used for other purposes, such as investing in new products or acquisitions. In Hovnanian's case, the buyback program suggests that the company is confident in its future prospects and believes its stock is undervalued. However, it's important to keep in mind that this is just one piece of the puzzle. To get a complete picture of the company's financial health, you'd need to look at its revenues, expenses, debt levels, and other key metrics. After what are my thoughts on Hovnanian? The buyback program is a positive sign, but it's important to do your own research and consider all the available information before making any investment decisions. Thanks for watching. If you found this helpful, please like and subscribe for more Corporate Decoder content. Let us know in the comments which company you'd like us to decode next.